Hello, good morning. From YouTube, let me connect my Facebook for my Facebook fans. So GBP USD live trading. Another day, another dollar. So let's go live on Facebook also. Okay, good morning from wherever you are listening me from. Good morning from wherever you are listening me from. How are you? I hope you are okay. I hope you have been benefiting from the live streams the same way I have been benefiting. So today is Thursday, and today is a continuation of yesterday. So how are you? I hope you are okay. Facebook for my Facebook fans. So I'm quite out. I think I'm quite audible. So let me also send this to my Telegram fans. Those who want to join us. If they don't want to join us, that is their problem, not our problem. Just 1 minute, we will begin immediately. Another live session. So good morning once again. Today is a continuation of yesterday. How is Euro USD performing right now? Shit. So yesterday our GBP USD went only 20 pips, but that was a risk reward of 1:2, and this risk reward is more than enough, or 20 pips are more than enough to create wealth. If you are able to get 20 pips every week, and you can manage your risk exemplary well, then there is a high probability for you to make a lot of money, or even to grow your account exponentially. So don't look at these 20 pips like a small feat. This is not a small feat. 20 pips is a lot of pips compared to what you are risking. And if you do that over a period of 5-10 years, not only will you build wealth, but you will build generational wealth. So most of my live streams, I told you one thing: we will not be taking trades, because the idea behind taking trades is taking trades which only align with your system. That is something I'm going to repeat each and every day. If the trade does not align with your system, then it is best not to take it. And this is a lesson that we learn when it is too late. Too late. This is a lesson we learn when it is too late. But the good thing is that you have decided to join me. And in joining me, I show you the raw and the raw, what is it called? The raw trading, in short, how real trading is done. Because we have a lot of fake traders and a lot of marketers and a lot of snake oil merchants who want you to believe that trading is an easy job. But statistics from 100 years ago, statistics of over 50 years have consistently shown that in this game, only 5% are making the money. But on social media, 90% are making money and only 5% are not making money. So it's quite the opposite. In real life, only 5% are, even those 5%, the people who are able to maintain that money over a long period of time are also very few. Because remember, it is one thing to make money from your business. Okay? It is another thing to keep that money, or even to maintain that money. And it is another thing to even multiply that money. So there are 3 things we are learning here, and most of you are still in stage 1. So the first stage is learning how to make money trading. But I can guarantee you that this is the hardest of the 3. This is the hardest. Learning how to make money in the markets. Number 2, managing your profits, stroke the salary you are getting from trading. Number 3, Number 3, multiplying these profits using other investment vehicles. So the hardest of these 3 is number 1, learning how to make money in trading. And it is possible to learn how to make money in trading but learning how to manage your profits or the salary which you are getting from trading is entirely a new skill you have to learn. Multiplying these profits using other investments is also a skill you have to learn. So it is better to first focus on learning how to make money in the markets the right way. The right way, not following charlatans or thieves. So here in my live sessions, I will not try to sell you unrealistic profits. My aim is to help you grow as a trader before you can learn how to start managing your profits or multiplying these profits. And the benefits I get from that are very many. First, I'm able to grow my following by attracting people who are in need of trading or serious traders. Number 2, it improves my focus. My focus it's top notch when I'm trading live. So, as a reminder, this is a symbiotic relationship, not a parasitic relationship. And that said, I also want to remind you that if you have not made or you have not created your account using my link on the bio, you are doing yourself a very big disservice. Because if you are making money from my live trades, I should be getting a bit of rebates from you. Okay? I should be getting some rebates from the parent, from the broker. So go to my link, register using my link, deposit, yes, deposit whatever you feel comfortable trading, because unfortunately not all of we don't have the same psychological bandwidth. So whatever you are comfortable depositing, go deposit. The link is on my bio or in the comment section. Find time, go through the broker, and then we can get in together. All right? Yes. So that is that. A man must promote himself. Okay? Yes. So now we are here in the business. We are here on the business of the day. Let's get into the business of the day. Let's get into the business of the day. So our pair is GBP USD. We shall go from GBP USD Euro USD, gold, US30, 4 pairs. But for the purposes of this live session and for the purposes of my trading, I only trade GBP USD. Why? Because that is what I'm most comfortable trading. So we can get into the business of today. We can get into the business of today. If you have a question, maybe you can ask it. We are going to discuss it as we move along. But the purpose of this meeting is to live trade the pound dollar and show you how I analyze the markets and how I take my trades. Okay? Oh yes. So we go to the daily time frame first. Because the daily time frame is what is going to give us a clue. So first, this rectangle indicates a what? Remember, this is something we have to do every day. In the weekly time frame, we can clearly see price is reacting from a bearish order block. So our bias is on the bearish side. Now we have these three candles. The first, this big candle here, this is the Monday candle here. Then we have the Tuesday's candle, then we have the Wednesday's candle, then we have the Thursday's candle. The Tuesday's candle went and touched the previous week's high. So for those who have not been here in my live sessions, I have insisted that every week price will form highs and it will also form the lows. So it will form a high of the day and it will form a low of the day. Okay? It will form a high of the week and it will form a low of the week. For example, this low of Monday, this is the low of the week of this week. This is the low of the week based on this Monday candle. And this is the high of the week based on this Tuesday candle. So that is the high of the week. So that is the high of the week. And this high of the week of this week coincides with the high of the week of last week. You can see that the high of the week of last week was formed on Tuesday 13th January. Today is Thursday 22nd of January. but our high of this week was also formed on Tuesday 20th. Tuesday 20th. So there's something I mentioned yesterday. Major or majority of the highs and the lows of the week are formed on Tuesdays. So majority of the highs and the lows of the week are formed on Tuesdays. And that is, and our good example is here. So we have Tuesdays here. We have a Tuesday here where we form the high of the week, and then we also have a Tuesday here, this Tuesday, which has formed the high of the week. Now before we move to the 1 hour time frame, this is a daily bearish order block. Daily bearish order block. And we can see price is reacting off this level. So today it is my anticipation that today's candle is going to give us a signal, a long-term signal. Now this is a long-term signal we are planning here. A long-term signal, maybe a 2-week signal. How will it do that? First, either it closes above, today's price will close above this level, so that you can get an entry to take out the high of the week, and possibly to come and take out this liquidity here. By the way, it is possible to make money every month as long as you understand what you are doing and you're not forcing the markets to give you profits, and you're able to restrain yourself from taking stupid trades. It is very likely, there is a high likelihood that you can make money from Monday to Friday, from January to December, from 2026 to 2050, every year, every month, every week. That is, if you are not forcing the market to give you profits, and you are restrained at least 50 to 70% of all the times, you have restrained yourself from taking any trades. So today price has gotten to our OB, and then we have these two candles here. So this Tuesday candle and this Wednesday candle, which have formed something called tweezer. So these are tweezers. So tweezers signify confusion in the market. So the market, good morning, Tijani. Good morning. So what was I saying now? What was I saying? So how the market is going to react from this point will give us a clear direction for the next maybe 2 to 3 weeks. And even though our bias is a sell, the market might decide to change. Yes, they're called tweezers. So we are at a very important level. And also don't forget that price has retested the high of the week, but price was unable to close above. So in all likelihood, my bias is still leaning on a sell. Why? Now let's drop to one now. Remember we have seen the daily order block and how price is reacting off that level, and you can see my order block has been drawn body to body. I've taken this small body, this small black body, and then engulfed a part of this long candle the way it should be. So it should not be, you should not take weeks. So this is a week. So you cannot take week. You cannot take a week. This is a week. You cannot take a week when identifying your order blocks. That's a very important point I'm trying to make here, and I want you to understand. We don't consider weeks when looking for price break or when drawing order blocks or so the best way to draw that order block is the way we have drawn it. Body, everything is a body. So that is that. So this is the daily order block. Let us mark it. So this is an OB. So we call it is an OB negative. So this is a bearish order block. So it's a bearish order block. It's marked by an OB negative. Then we also have our high of the week. Our current high of the week is here, and our previous high of the week is also here. And you'll also note that I'm not using any indicators. So someone has been asking me why I don't use indicators, but you can see indicators are second. We call them indicators are second language. They are not first-hand information. For example, right now we are obtaining information from the market first-hand. We are not relying on a MACD to change. We are not relying on Bollinger Bands to expand and contract. We are not relying on RSI to show us overbought and oversold conditions. No, we are relying first hand on market structure, or what we call price action. And price action can be in many forms. It can be in reading candlesticks. It can be understanding inner circle trader or ICT trading method. It can be understanding Wyckoff schematics. It can be understanding fundamental analysis deeply, that you derive your strategy from fundamental analysis. It might be combining fundamental analysis and AI. Okay? So there is a lot of money to be made as long as you hold your, you keep updating your trading software. So your trading software is your knowledge about the markets. We are moving into the age of artificial intelligence. Do you use artificial intelligence in your trading? And if not, why? So we are at this now. This is our price action now. We already have our low of the week, and we already have our high of the week. This is our high of the week formed on Tuesdays, and we have said 70% of the time the high or the low of the week is formed on Tuesdays. So now this is Monday. This is Tuesday. And how do I know it's Monday or Tuesday? I use these dotted lines called period separators. So how do you input period separators? You right click. So you go on your trading view, you log in into your trading view, you right click, then you come here to settings, and then you come down here to price labels and lines. So you tick everything, and then you come down here to time scale. You come down there to time scale, then you tick day of the week. So you put OK. So Tuesday. So now this is Wednesday. And then now today is Thursday. Okay. Is that a good thing? Do you understand me? Do you understand me? Now, with those days intact, the next thing we are looking for is which order blocks have been broken. First, we have this yesterday's high. Tuesday's low was broken. Tuesday's low was broken. So the only thing we want to do is to wait for either price to come and take out this Asian low. This is Asian low. Or because the way this market is looking right now, I cannot tell you where the fake move is. So the best thing is usually to wait. The same way we waited for this trade yesterday, and we were able to benefit. So yesterday's trade, we wanted it to break this level, this open day price. So yesterday we waited for price to close below, then we dropped down into the lower time frame, into the 3 minutes or 1 minute time frame, and this trade went about 30 pips. So for me, I only got around 20, and then I was out. So that's a 1:2 risk reward ratio. Now we come to today, Thursday. Today, Thursday, we would like to see the Asian low being taken out. We would also like to see price come and retest that Asian low for us to get an entry. So it is not it is not a very hard thing because we keep repeating the same things every day until they become so monotonous. The only small excitement you get from trading is that not every day is the same. Okay, sometimes you may approach the market from a desperation point. Sometimes the market does not want to give you any profits, not because your strategy is wrong, but because the market is not just the market is not designed to give you profits every time. The market is not designed to give you profits every time. So it will be foolish for anyone to try other methods just because their current method is not bringing in the profits they would like. So for example, right now, we are waiting for price to do what? To break this level. I hope today price is not going to play games like yesterday, because if it was not for the fact that I was in the market during this time, I would not have gotten into this trade. So as traders, I also think we need some sort of kind of an alert. Trading View has that alert program, but I don't know, I've never used it. I've never come around to know how to use it, because if we have an alert, we could. Because all my alerts either go to my email, and you know I don't check my emails so much. But alerts are important. Why? Because yesterday's trade manifested almost 1.5 hours later from when we started this live streaming. So I left here at around 10 a.m. but the market manifested, or the market panned out 1 hour later. No, I left here at 11 a.m. but the market gave us profits around 12:20. So if you would have a software which will be designed which will be an easy to use software to give us alerts once price breaks our specific levels, it will be great, because sometimes you lose a lot of money by just not being in the markets at that time. So that is 28 pips. So this is today's analysis. Simple, and direct to the point. If it can also break this level, this is the Asian high. But my goal is for price to break through this level. That is my analysis for today. Price to break that level, then maybe we can come up to maybe you can come up to that level. So if you have a question, you can always ask me. So this is my analysis for today. Only 6 pips to know whether we should get into this trade or not. There's no need for us to get caught up in a bad trade just because we want to have an aggressive entry. If you are careful enough and look, good entry opportunities will always avail yourself, will always avail themselves to you. It may not be every day, but on the days those opportunities avail themselves to you, you have to take that opportunity. Because absolutely no one is going to give you that opportunity if you don't believe in yourself. And as we said, this field is all about confidence and emotional control, especially emotional control during the live markets. When you are winning, emotional control. When you are losing, emotional control. Most traders don't have emotional control or emotional intelligence. I don't know whether we are having daylight savings. Do we have? When does daylight So daylight savings will begin on March 8th. So from March 8th, we'll be operating from 10 a.m. because when daylight savings occur, you push your market open 1 hour late. So I thought we are still operating during the daylight savings because most of the GBP USD mornings have been quite slow. Trades only manifest when the session is over. So I was thinking we are using the daylight savings where we push the market open 1 hour after, but the daylight savings this year are beginning on March 8th. So we are still correct on coming to the markets during these hours. By the way, if you are listening to me and you understand how to use the TradingView alerts, I would appreciate if you would show me. I want these alerts to be coming to my phone directly like a message. So when I set an alert at this level, at level 34.30, I want to get an alert when price gets to this level so that I can just get in and sell immediately. For example, this would have been a very good trade. I would have adjusted my stop loss to that point. So around 4 pips. 5 pips. Then my take profit would have been something like that. So in these live sessions, most of the times you'll see the stop loss oscillating. Sometimes we shall use 20 pips, sometimes 15 pips, sometimes 5 pips, sometimes 30 pips. It depends on where our structure is. And how confident we are in that trade. For example, this is a very high confidence trade. An extremely high confident trade, this one here. Yesterday's trade. So 1 hour into the live session, no action yet. You can check Euro USD or Euro pound, Euro dollar. So the euro dollar is quite interesting. When we take when we draw the fib, the long-term fib, from the highest level, which is that level, to the lowest level, it gives us a story. Let us enlarge. So the fib clearly indicates one thing, traders, that price has been reacting off this sweet spot, and it has not yet broken this sweet spot for anything. So we are still operating from this sweet spot level, and we already have a high of the week. So my bias is also on the sell side. What about DXY? Let's check DXY. So I'm taking the low of 23rd deck, and then I'm putting it against the high of 15th January. So that is almost how many weeks? That is around 3 weeks of consistent price action. Consistent price action. So to me, DXY is still buying. Okay? Because this sell momentum of, so let us mark this sweet spot level. So we have from this level this level. Okay, so I'm using the price action of 3 weeks from this point to this point. You can clearly see that the market was on a very bullish uptrend for the past 3 weeks, but on opening January, what the market did, the markets began selling aggressively, in a bid to collect more orders. So this is what the market is, by selling, the market was trying to collect more orders, and it came and filled our sweet spot level, and it began doing what? It began buying. So on the DXY, we already have our low of the week. Okay. On GBP USD, we already have our high of the week. So what does this tell you as a trader? That DXY has formed the low of the week and GBP USD has formed the high of the week. What is the information you will derive from that analysis? Remember, DXY is the mother of, DXY is the USD currency. So DXY equals GBP XXX, so that is DXY, or XXX CHF. Okay, so DXY is USD chef, GBP USD. So this is the DXY, and we can see clearly that DXY equals formed low of the week. And GBP USD equals high of the week. If you have not seen DXY, let me show you DXY so that you cannot complain you cannot see DXY clearly. Clearly you have seen, I have explained to you that we are using data for the past 3. It is not me using that data. It is the market. We are using the market data. We are using what the market is giving us. We are not trying to force the market to give us profits. No. Okay? So understand me clearly. Understand me clearly that this is not something I'm trying to guess, or I'm trying to think, imaginations. They are called imaginations. No. We are using data. Now the data shows that from December 24th to January 16th, a period of 21 days, the market was on an uptrend. So as trading cyborg, I wanted to get the next sweet spot level. And the next sweet spot level is 98,300. That is how I do my analysis. Now let us delete this one. Let us remain now with the sweet spot level which you have marked. And as I told you, the FIB is a very, very strong and very important tool in your trading. It is not the only tool. And you should not be using it as a standalone tool. Okay, so don't get me wrong. It is a good tool to give us entries and exits. Let us draw this again. Remember, don't use the Fibonacci alone as a standalone tool. You must spend 1 year, 2 years, 3 years learning price action first, or market structure, so that you can be able to benefit from all market conditions, bearish, bullish, consolidating markets. We are going to be eating everywhere, every day. For example, right now, we are struggling in consolidating markets. Even if you see these small bullish momentums, or these small bearish momentums, the overall trend of the market is that it is it's quite consolidating because it has been moving slowly. I've mentioned that this month I've noted that the mornings are quite slow. I don't know why. So the Fibonacci is a good tool to give us entries, for example this entry, and exits. So exits can be either at this level, most likely at this level. So that is the Fibonacci. Now Fibonacci came and did a the market price action on Monday for DXY began by selling and creating a low of the week at our sweet spot level. Somebody put a like, because this is a very good confirmation. Somebody put a like there. Some likes there. I need some likes because this is knowledge you never had. You're just getting this knowledge here, all this information, by analyzing these pairs right now with you. So how I'm analyzing with you is how I'm going to get into the markets also. Okay? So there's no other secret information I'm waiting to give you. The 8 of you who are listening to this right now, you're the ones who are getting good information. So what the market did, it came and formed the low of the week at the sweet spot level. And I've showed you where we got the sweet spot level from. So this is increasing our confidence slowly by slowly. So on Tuesday, we formed a low of the week using this wick candle. It's a wick. But nevertheless, it filled this sweet spot level. Number 2, yesterday, price came and retested this level. You might not believe this, but the Fib is also responsible for this. How? Let me show you so that you can be more surprised. So you take the lowest level, and then you take the highest intermediate level. So this is an intermediate high. So this is an absolute low or a defined low because it is the lowest low, and this is the highest high because it's already a defined high. Okay? But these other small lows and highs inside the trade, we call them intermediate lows and intermediate highs. So this is an example of an intermediate high and an example of an intermediate low. Now, I want you to check clearly for some magic. You see some magic. Can you come and see? Can you look clearly? Where did our price come and get inside? Or where did price come? What level did price come and fill? It filled the. Sometimes this market makes me excited for nothing. Because Fibonacci is based on real life mathematics. But these occurrences occur everywhere. It is not only in the charts. It occurs also in your life. So this is a study of numbers. So Fibonacci is not it's just a tool in the markets, but on a larger perspective, Fibonacci is a serious, it's one of the best indicators out there, whether in the markets or whether in life. So price came and filled this level very well during the New York Open. Okay? Before proceeding again on its intended direction, remember, we have said one thing: the whole of this move from this point to this point was price collecting orders. And now, to the best of my analysis, of my technical analysis, we are going up, or we are starting to buy, and that will be a good level for price to do what? To get in. You see something like that. Now we don't know whether the market is going to continue trending, is going to trend upwards on a long term. We don't know whether it's going to get to this level, because we have more liquidity at this level. This is an area of liquidity, so we don't know that. We don't know whether the price is going to get there. So it is best to set our targets to a level where price is likely to get to. And where is price likely to get to? To a high of this is our high of January. No, these are our to this high here. So if price can only get to that level and maybe break, if it breaks, now we have new information. If it breaks this, if it comes and breaks this high here, now that is new information the market has given, and you have to react to that information immediately. For the sake of your peace of mind, I told you, when you get a confirmation of a trade, don't start thinking, is this a good trade? Are all my confirmations met? As long as you've done your analysis the way you are doing our analysis right now, when the good trade comes, get in, then think later. Because thinking, the more you think, the more you increase doubt. So you have to bridge that gap between thinking and execution. So when you execute and before you think, you have already executed. You have bridged that gap immediately. But if you stay for 10 minutes or 1 hour, the trade will leave you. You'll start getting angry. You'll be emotional. Because remember, it is not only losing trades which annoy us. For example, myself, I noted that right now I'm very immune to losses. But when I miss a trade, I feel very painful. It is like the first days when I was losing, the first 3 years when I was losing. That is a very painful experience, let me tell you the truth. Very painful. There is no need to lie to you. Oh my God, very painful. But as you continue executing, you adapt. But now there is another pain of losing trades, of missing trades, and there's also the pain of it's more of a regret. The regret of entering too late. So if you get in too late into the markets, you miss maybe 10 pips, and then the market goes 30 pips, you will feel that guilt. So the best thing is always to do our analysis as quickly as possible, as early as possible, then plan ourselves ahead. So for example, if we translate this now to the other pairs, that is to a pair like now GBP USD. What the hell? So now if we translate this to GBP USD, so this was our first winning, this Wednesday trade was our first winning trade of the week, but we lost another trade on Tuesday. On Monday I never took any trades. So we were saying, if we translate that analysis we have done on an equivalent pair like GBP USD, you'll find that we already have our bias for a sell. The only thing we are waiting for is a confirmation, because we don't know whether price is going to get to this level, then sell, or price is just going to come and sell immediately. We don't know. And as I told you yesterday, there is absolutely no need for you to be stuck in this, from this level to this level. Why would you want to be stuck? Why? And you know, being stuck from this level to this level, that is psychological torture. Because first you know, or you are aware that you would have just waited for how many pips? Only 7 pips. 7 pips will give us a confirmation. And by the way, let me tell you, when you get a good confirmation, it is possible to risk more. For example, if I get in right now, if I was to get in right now at this particular time we are talking, I will use a small lot size. Maybe I will risk only 0.5% of my account. Okay? Are we together? At this point? Are you sleeping? Drink some water first. Drink some water. So, if I get at this particular level and I have not yet confirmed, my confidence will not be very high, because I don't know whether price wants to come to this level and then it starts selling. No, I don't know that. But what I know is that if I only wait for 7 pips, so what is 7 pips? Imagine waiting for 7 pips. Now, if I wait for 7 pips, good morning, Yakubu. So if I wait for 7 pips, I will get more confidence now. To do what? To get with a bigger lot size. It is only that the prop firm I use, because I'm using a prop firm and a broker. So I'm currently trading a prop firm and a broker. So if I use a big lot size, if I get a good confirmation, I will use bigger risk. But the problem with the prop firms is they only allow 1% these days. So they are not very good also. If they could allow us maybe 3% or 4%, it will be better. But they don't want to lose their money in the long run, which is okay. So the point I am trying to make is simple. If I only wait for the Asian low to be swept, I will be at more advantage of using a bigger lot size than if I get in aggressively without a confirmation. That is the point I want you to understand right now. And waiting will cost you nothing. It will cost you 0 to wait. Yesterday we waited and we got in. And in hindsight, there's something I'm trying to teach you. In hindsight, I'm trying to teach you something called self-control. You don't have to get into any trade just because you have the capacity. Just because you have the money does not mean now you should expose yourself every day to foolish risks or unmitigated risks. Okay? And let me tell you, from this point to this point, it might take even 3 hours. Now, imagine if you are stuck in this trade for 3 hours, just hoping that it will give you profits for nothing. It is better I confirm, then I get taken out. That is better with me. That is much better. It is much better. Because I'm going to go home happy. At least I waited, I confirmed, I got in, I got taken out. That is much better. So daily market analysis from the daily time frame is very important. Even if we did it yesterday, tomorrow we shall still repeat the same thing, so that we can get information which we don't have. Okay? For example, today we have seen that on the daily time frame, we have gotten new information on the daily time frame. That price is reacting of this order block. That is new information we have gotten today. We never had yesterday. Okay? So from this level to this level, price might take even 3 hours. And this is the time it plays, this is when it plays psychological games on your mind. You get in, you get out. You get in, you get out. You get in, you get out. You risk more, you risk less. A very sad way to live, if you ask me. So every day we do daily market analysis from the daily time frame, where we identify new order blocks formed, broken, retested. Remember, we are financial analysts. We are financial analysts, and as an analyst, there is always a piece of information on a daily basis. So we identify new order blocks formed in the higher time frame, the ones which have been broken and the ones which have been retested. Number 2, we drop into the 4-hour time frame. We observe which fair value gaps are yet to be filled. We also check FIB. We also check possible sweet spots. So you can see I am using every trick in the book to increase my confidence. Okay? So my confidence does not come from having capital to trade. No. My confidence comes from understanding what I am doing, why I am doing it, and how long I can do it for. So, for example, how long can I wait for this trade to mature? So, the 4-hour time frame must show the fair value gaps which are yet to be filled, possible sweet spot levels, especially possible sweet spot levels. We are also doing comparison of DXY and other pairs. By the way, if we meet that, not if we meet that, that is not good English. If we find that DXY, let me show you this. Let me show you this practically. So DXY, if DXY is moving like this, okay, GBP USD should be moving like this. That is simple and straightforward. Simple and straightforward. Everyone understands that. And if you don't understand that right now and write it on a piece of paper or on your phone or on your thigh, wherever you want to write it, or on your ear. So when we are analyzing, if tomorrow we come into the markets and then we find that DXY is buying and GBP USD is also buying, brethren, this is the time you take your money and say, let the foolish ones perish alone. Because this is what we call a seek and destroy environment. DXY and GBP USD should not be moving in the same direction at all. And these are the kind of environments you're supposed to be avoiding. And how do you know how to avoid these kind of environments? Coming into the markets and analyzing every day from daily time frame to the 1 minute time frame. If you said you want money, if you said you want to make money in trading, you must accept to do this analysis daily without getting tired. Yes, it is tiresome, it is boring, it is all those things. But when you are withdrawing some money, hey, it is the sweetest thing ever. The sweetest thing ever is to get that confirmed message. Confirmed, you have received. You get, and those spasms of joy, they never get old. So the point is, if DXY and GBP USD or Euro USD or Audi USD are moving in the same direction, you have to avoid that market completely until it realigns itself. Somebody say amen. Today the church is is filled with the Holy Spirit. So I was talking about the DXY and why you analyze it in the 4-hour time frame and in the 1-hour time frame. Now in the 1-hour time frame, that is where we do bulk of our work. In the 1-hour time frame. In the 1-hour time frame, we are checking various things. Number one, and the most important, is previous weeks highs stroke lows. We're also checking previous previous, but then don't forget, we are still waiting for GBP USD to confirm. It is still playing games on us, so we are just discussing, we are just talking as we wait for it to give us a signal to get in. So don't think I've forgotten about GBP USD. I'm still looking at it, stalking it, waiting for the opportunity to pounce. So 1-hour time frame, you must check the previous weeks highs stroke lows. You must also check previous days highs or lows. You must also check, and let me tell you, it is not just checking. You must check, and then you must ask yourself, how do this relate with the larger picture? The way we have tabulated from the daily time frame up to the point we are in right now. So previous sessions highs or lows. So for example, right now we have our Asian high here and our Asian low here. So yesterday we used the previous session's highs to get an entry. Even today we are using the previous session's highs or lows to get an entry. Okay? Now that is how we read, that is how we tabulate price action, that is how we get signals. The disadvantage of doing this alone is only one. Sometimes you will not be as serious as you could be when you are doing this with a group of people. So for the 10 of you who are here, we are sharing, we are having a tete-a-tete. While stocking this market. So you also have to check the previous sessions highs or lows. For example, we have the Asian high here. We have the Asian low and the Asian high. Okay? Now we are anticipating that because, okay, this other line here shows what? It shows Tuesday's Tuesday's Asian low. So we can see clearly that the market has swept the previous session's lows consecutively for 2 days. And this gives us confidence that the market has a high probability of continuing to trend downwards. Do you get me, or do you not get me? I know you are getting me clearly. So the 1 hour time frame, this is what we are trying to check always. In fact, we can even add Fibonacci. Okay, and remember what I said about Fibonacci. Fibonacci is a good tool, but don't use Fibonacci as a stand-alone strategy. You must incorporate Fibonacci with market structure. What is market structure? This is market structure now. This is market structure. You have to do this dirty work every morning. Believe it or not, you have to do this dirty work every morning. To be in that top 5%, to be in the top 5%, you have to do what the 95% are not doing. You have to be willing to do what the 95% are not willing to do. Even if you are feeling bored, let me ask you, when you are going to your job, your day job every day, is there a day you ever woke up and said, today I don't feel like going to work because I'm tired, my boss will have to understand? You have never said that. You wake up, whether you like it or not, whether you're having a bad mood, negative emotions, you wake up, you'll bathe, and then you'll wear clothes, you'll go to your job. The good thing is you are here with me. And you also want to evolve into a full-time trader like me. So, where are we? I have digressed, but we were talking about the 1 hour time frame. So the 1 hour time frame, you have to check for those 4 things. You can also add FVGs, but for me, FVGs, I like to check them in the higher time frame, the 4 hour or the daily, because they are more significant there. Now, after the 1 hour, we are not yet done. We are not yet done. After that, we go to the 15 minutes. So the 15 minutes is just a repeat of the daily time frame. So here we want to, because in the 15 minutes or in the lower time frame, from the 15 minutes, 5 minutes, 3 minutes, even 1 minute, we are trying to get entries and exits. So in the 15 minutes time frame, we want to get entries and we want to get exits. The best, and in fact, we don't only want to get entries and exits. We want to get the best more than anyone else. We want where we are going to lose, we are going to risk less and make more. Always. Okay? Remember, you are trying to put the favor in we are trying to We are trying to put the favor in our hands. Okay? For example, I know if price breaks this level, at whatever time it is going to break that level, I will risk something good because I know how many pips are these? Let me see. These are 34 pips. In fact, when I get these 34 pips, and then I had 24 yesterday, if I only get 20 today, 20 only, now I'm closed for the week. I am closed for the week. I am closed for the week. Or if I'm going to come back tomorrow, my risk will be negligible. It will be zero. It will be almost a quarter of what I'm risking right now. So that is the importance of good entries and exits. No one should lie to you that the lower time frames have no use. If someone is telling you they have no use, it is because they have not yet traded before, or they don't have enough experience, or they are too egotistical. They think that because they are trading the higher time frames, these other time frames, I had someone calling these lower time frames noise. Then I began to wonder, what is wrong with this person? Are you okay? Drink some water. Drink some water, my friend. The only thing I can disagree with, honestly, is that you cannot conduct your analysis in the lower time frame and still get in the lower time frame. You're going to be confused by the bigger picture. And what I'm trying to repeat to you every day is that whether you are a intraday, swing, scalper, positional trader, you have to base your argument on a bigger picture, based on the bigger picture. So to some extent, I can agree with those who trash the lower time frames, but the lower time frames have their purpose in the markets. So don't think that 1 minute time frame is useless. It might be useless to you, but there is someone who knows how to use that 1 minute time frame to get the best entry and the best exit. Okay, that is a 15 minutes time frame. You can also add okay, you can also add checking for broken OBs. So for example, right now we are waiting for we are using this order block here. We are waiting for price to come and close below it. But as I told you, price action sometimes is a which word can I use? It's a pain in the ass. For example, right now, price action is a pain in the ass because eventually it is going to come and close below. Now imagine if you had gotten a buy, we had gotten in a buy at this level. Where do you think we would be? Or yesterday, imagine if you would have gotten at this level, at this immediate level, at 10 a.m. So this is 10 a.m. yesterday. This, let me enlarge this for you to see. So imagine if price, imagine yesterday if we would have gotten in at this particular level. And yet we are intraday traders. As intraday traders, we know that the patience to wait for a trade for that long is not there. So for me, if I would have waited for 25 minutes and the trade is not giving me what I want, I would have gotten out. would that have been a good decision? That would have been a very wrong decision, because eventually the market came and got to a point of interest. Now this is where our alerts come in. And as I told you earlier, it's only that I was lucky enough to be on my monitor at 12 a.m. Otherwise, that trade will still have left me. So I'm asking anyone, the 10 of you who are here right now, if any one of you can help me to set the trading view alert, such that it pops up like a message, or it rings, it starts ringing immediately, so that when I'm alerted, I can get in quickly. So if we would have gotten in at 10 a.m., we would have had to wait until 12 p.m. That is how many hours? That's around 2 hours. 2 hours. 2 hours being psychologically tortured. Yet, when price just confirms with that break, a simple break, now you can even drop the 5 minutes time frame, or even the 3 minutes time frame, any time frame, as long as it's a lower time frame. Okay? So immediately this candle broke through. You don't even wait. You don't even wait. So at this point, I use more risk than what I would have used if I had waited for this whole setup to play out. So what I'm trying to avoid for you and for me is these scenarios. You see these scenarios? These are the scenarios I'm trying to avoid at all costs. I want to get in and get out and then go. So get in, get out, go. But if I also get in at this point and the price starts playing mind games on me, I give it 25 minutes. 25 minutes only. Then I ruthlessly cut it out. I don't even think twice. So once I get in at this level, at a confirmed level, my anticipation is that this price is going to give me what I want in the next 1 hour. Okay? It can go as much as it wants, but I'm targeting 1 hour, 1.5 hours, 2 hours, and then I'm out. In fact, for me, once I've gotten this significant portion, then I start seeing prices doing these games, I reduce my position to by 70%. No lie. Or sometimes I take out everything and then I go. I come back tomorrow. Okay? Because as long as my stop loss is more, so that is a stop loss of 6 pips. I took about 20 pips. So as long as my stop loss is more, that is the only thing I care about. I am winning more than I am going to lose. So you can see, Trading Cyborg has come here to cater for his own self-interests. The market has its own self-interests, which is to take your money and put you in depression and possibly kill you. But your self-interests are take out a small chunk of the market profits. You don't even want everything. You just want a small chunk. Alright? Are we together? So GBP USD is still playing some games on us, but our anticipation for today is that we are going to go down to this level, possibly to this level. That is if price wants, and possibly we are going to come to these to these liquidity points. So the journey is very long, but only the patient are going to get what they want. So Lewis is saying, so good morning Lewis. My thoughts are, if we are going to trend downward, and if the 4-hour time frame confirms we are in a premium, we are already in a premium zone. My brother, we are already in a premium zone. Let me clear this for you. We are already in a premium zone, my brother. You might be late, but we are already in a premium zone. So this is a premium zone. So price has been reacting from a premium zone from Tuesday. So for those who don't know what a premium zone, it's anything above 50% of the Fibonacci. That's a premium zone. And it's called a premium zone because that is where you can comfortably sell or buy. DXY, let me show you, because I need to show you. DXY is also in a premium zone. DXY is in a premium zone. Okay? So this sweet spot level is a premium zone, and premium zones are identified in the higher time frame. And a simple word for premium zones and discount levels is your Fibonacci. Check your Fibonacci. When it matches with 60 to 70%, that's a premium zone. So we were on GBP USD. So these are psychological games I try to avoid in the markets as much as I can. I don't want to get caught up in these kinds of consolidations, because these are traps. These are traps, my friends. These are traps, and these are mostly psychological traps, especially if you are not trading the higher time frame. Remember, our psychologies are wired different. There's a trader who can hold a trade for 2 weeks. There's another one who can hold a trade for 6 months. There's another one who can only hold trades for 3 to 4 hours. Everybody's psychology is different, and you have to accept your own level of psychology. The truth is, I have tried many times to become a swing trader, but in the long run, I accepted my strengths. My strengths are that I am a person who likes to get in and get out and go about my day. I don't want to engage in other activities when I'm worried. When I'm worried about the trade I put on, I don't want that. So the only way to respect my spirit, because trading is also spiritual. The only way I'm going to respect my spirit is if my trades are aligned with my strengths and weaknesses, and not trying to change myself. It is very hard to change yourself, by the way. Okay, so if you're a good scalper, no. So for scalpers, the only thing I can tell you, you can become an intraday trader if you are confident in the markets. Okay, and I told you the only reason I hate scalping is because you can win for 2 months straight, or even 1 week straight. You can win, especially in a trending market. Whether in a downtrend or an uptrend, a scalper can make a lot of money, even double the account size, even 3 times, even 10 times. Now the problem comes in when the market starts consolidating the way it's doing right now. My friend, you'll see fire. It will only take one trade, one loss, and everything is wiped out completely. Now the problem is not even the money, it's not even losing that money, okay? Because money is easy to obtain. You can go back to your day job. You can do anything to get the cash. The problem is the psychological trauma it lives inside of you. Remember that loss has been it was not a calculated loss. So it has caused some type of shock inside you. And do you think your subconscious mind forgets those shocks? Your psychological mind, your subconscious mind never forgets those shocks. So the more you continue trading and losing, now your natural state of emotions when you are in the markets is fear. There's a guy who I saw had written on Twitter that he's always afraid of Mondays because he knows when Sunday evenings come, or when the weekend is about to get to finish, that guy is always afraid because he knows on Monday the market is going to give him a beating. He's sure of that. And where do you think that guy is sure that the market is going to give him a beating? Or where does this fear response come from? Where do you think that fear response is coming from? Where do you think it comes from? Where do you think that fear response from that guy comes from? That he knows by Sunday evening he's nervous because he knows on Monday the market will start giving him a beating. And once fear is your natural response to the markets, you become what we call a consistent loser. So we have consistent losers, we have boom and buster traders, and we have consistently profitable traders. So consistent losers are traders who are living in fear, because fear is their natural response. Like that trader who I saw on, why? If you look closely, that trader might be a scalper. That is the only disadvantage of scalping, that today you will make a lot of money, but it will take only one big trade to destroy you and your confidence. So the only way you should use scalping is when you are in a drawdown. For example, if you have $1,000 account and you lose $200, that is, now you're in 800, you have $800. So the only way you will use scalping is for you to scalp those $1, $2, $1, $2. When they accumulate, they'll give you something like $50 or even $100. That is going to give you now the confidence to get back to your system and be able to wait. That is why I'm insisting that this game is a mental game. It's more of a mental game, not even the technical. Yes, the technical is good. Understanding the technicals is good, because understanding the technicals deeply is also an edge, because understanding technicals deeply gives you confidence. For example, the only reason why I'm able to wait right now is because I have some confidence in the market structure and in what I am doing. Otherwise, I would be here guessing with you. We would be here guessing the market direction with you. And then I will be promising you. Imagine I saw a guy with 330,000 followers, subscribers on YouTube. A very big YouTube trader. He's from Uganda. He's a young man. So that guy, he lost twice on live. And then he started panicking. And then he started telling people on the live stream that they should not worry. He was going to give them a recovery signal. Then I wondered, who are you to promise people that you're going to give them a recovery signal? As who? Who are you? Why are you trying to predict? Why are you trying to give yourself why are you trying to give yourself a responsibility which you should not be carrying? That's a very heavy responsibility. But I promise you guys, next time or tomorrow, I'm going to give you a recovery signal. Why and who? Who gave you that authority? What if you lose for the next 5 days? What will you do? What will you tell your people? Okay? So some people have a lot of followers. They have a big following, but they are promising you a lot of snake oils. They are snake oil merchants. Okay? So here on the Trading Cyborg live stream, we will analyze together. We will wait for the market together, and when the market confirms, we will take the trade together. And when it comes time to add more lots to your trade, I will also encourage you to add more lots. When it comes time to reduce those lots and place conservatively, I will also encourage you to do that. But it is not an everyday occurrence. That is not an everyday occurrence. For example, on Monday, we never took any trades. Why? There was a holiday. There was a US holiday. And when there is a US holiday, we have what we call the seek and destroy conditions. In simple terms, when we have holidays, the market is moving very slowly, very slow. On Tuesday, we were taken out. Now for Tuesday, I can accept that that was a mistake on my end, because I looked at the confirmation. It looked like a confirmation, but it was not really a confirmation. Okay. Also, I had also not checked the 4-hour time frame. Now, when we checked the 4-hour time frame yesterday with you, if you are here, we saw that from this point to this point, our best sell level would be to this level. But us, we had put our best sell level here. Okay? So that is why I'm insisting that every day you have to do analysis from the daily time frame to the 15 minutes time frame, and then 5 and 3 minutes time frame you get in. All right. So now Monday, zero profits. Tuesday, loss. Now whatever I would have promised you now on Wednesday, we are going to get profits. It is very wrong to make such kind of a promise to you. It is very wrong, by the way, very, very wrong. Now on Wednesday, the market was kind enough to react to the price action. So it gave us some good pips, but my expectation yesterday was that the market was going to do what? Was going to get to this level. But I managed to get some 20 pips, which were okay. Very okay. Now if I promised you a win yesterday, for example, now today if I promised you a win, will you be very happy if you never got that win? You will not be happy. Okay? Because you are here to witness or to see how real trading is done. Now today we are waiting again. Yesterday we also waited, but the trade came later. I know also the trade today is going to come later. So my question to you is, what would you rather see? Would you rather see illusions, or would you rather see the truth of the matter and grow your account slowly? By the way, I told you it is very possible. It is possible to grow your account from $100 to $1,000 in a year, or even in 6 months. By the way, if you join my live sessions almost on a daily basis. Okay, and that is why I've been telling you, if you are going to make money from my live sessions, you have to register that. It is a request, because if I'm giving you value and you are getting value from me, there's no need for you to make profits and then I don't get some rebates from the broker company. So the larger lot sizes, because the way the broker pays is through lot sizes. So for example, when you are trading $100, we'll be trading maybe maximum 1 month will be 1 lot for each. But as your account grows, so from 100 to 500, by the time we are getting to 500, we shall be trading around 2 to 3 lots every month. So if your account gets to 500, we shall be trading 3 times the lots we are trading when we have $100. Okay, you understand me? When we get to $1,000, we shall be trading 3 to 4 times what we are trading now, or 5 times what we are trading now. And in all those times, the trading cyborg could be getting some small rebates. So wherever you have put your money, remove it there, then put it here now. Okay? Yes. So today is another example of why we need to wait. The market is still very slow. I have no idea why. It has been very slow in the New York sessions, in the London sessions, the market has been very slow. I have no idea why. But most likely it's because it's still January. By the time we are getting to February the 10, if you'll still be here, even you yourself won't be believing. You won't believe. By the time we are getting to when? So a lot of volatility starts from the second half of the year from after August, from September. From September, we also have a lot of volatility injection. So September, October, December. No, September, October, November, December, up to date 15th of December. Okay? So the trading cyborg will be here from Monday to Friday, and Saturday and Sunday sometimes. But I will inform you before I go live on Saturdays and Sundays. But right now, what you should be journaling. Some of you ask me, what should I be journaling in my journal? What should I be journaling in my journal? No, this is what you should be journaling in your journal. On January, we experienced low volatility on GBP USD, and then you highlight it. Now, in 2027, you'll go back to your notes and see that in January, we have low volatility. We experienced low volatility for how many days? For 25 days in January. That is why your journal is important. In 2030, you write, for the past 3 or 4 years, January months have had low volatility. How do you know that? Journaling and being in the market with the trading cyborg every day and observing the market movements. There is no any other way. Even mentorship cannot give you that kind of experience. Experience is what we are doing right now, building it. And the good thing about building trading experience, the good thing about building, by the amen, hallelujah. We have talked so much, but these are very important things we are talking. So breathe in, breathe out. Breathe in, breathe out. So the good thing about continuous exposure to the market on a daily basis is that experience compounds. It compounds. And you know, my uncle, Albert Einstein, said that, what did my uncle say? My uncle, Albert Einstein, said that compound interest is the 8th wonder of the world. Sharobiz Flambagasta. Some of you have very, very, very scary names. So, compounding interest is the 8th wonder of the world. So, the more we expose ourselves 2 hours every day in the markets, the more our experience grows. For example, the trading cyborg of 2019 or 2020, when I began trading, will be very surprised at the trading cyborg of 2026. In fact, he will not even believe that is the trading cyborg of 2026. He will not believe. In fact, he will not. It will be something magical. Magical. All because of what? The compound interest on being on the screens daily. Whether you are taking a trade or whether you are not taking a trade. Whether you are losing, being in the markets every day does not mean we are trading every day. Okay? Being in the markets every day does not mean we're in the markets, we are taking trades every day. So 2 hours have passed. GBP USD is still playing psychological games with us, on us, not with us. GBP USD is still playing psychological games on us. And the best thing, traders, the 15 of you who are listening to me, is not to engage in those psychological games. Don't engage in any psychological games with the market, because the market eventually wins. Don't try to get in early. Don't try to take an aggressive entry. Don't try any shenanigans. But when you get a good trade, my friends, when you get a good trade, don't be afraid. Put that risk and eat that money. Because when the market wants to take from you, it is also very merciless. So when you're taking from the market, you also have to be merciless on the market. Don't be afraid. So that the day you lose, it is going to compensate. It is going to be a small loss. Okay? So when I check your portfolio, when I take Lewis portfolio MT4, I open Lewis MT4, and then I put a custom date, 3-month results. I want to see 4 things. Number 1, very small losses, very small losses. Number 2, I want to see very small wins. So this 20 pips, 10 pips, 15 pips, okay? 5 pips profits, 10 pips profits, 20 pips profits, okay? And then the other last thing I want to see is occasional big wins. I want to see 50 pips profits. I want to see 80 pips profits. Maybe 1 or 2 trades or even 3 trades a month. If you are lucky enough. If we are lucky enough. For example, so far from the time I began live streaming on date 5 January, I've only had 1 day where we got 50 pips. And I was very surprised because it was the beginning of the year. This is the day we got 50 pips. Is it this day? Yes, it is this day. So on this day we got 50 pips. 50 pips is a lot of pips for 1 day. No one should lie to you. And considering my my risk to reward was 1:2. So what I do, I have told you, I have to put the odds in my favor. Always, my friends. This game you have to. So my risk was 10 pips. I got to 50 pips. And inside this trade, I also added more trades because I want to squeeze every piece of juice in that good trade. So that even if I lose consecutively, assuming I lose on this day, I lose this on this day, I lose on this day, I lose on this day, I lose on this day. This profit which I got here is going to cater for all these days. That is how I live. That is how I trade. So I maximize. I take every piece of, even the bone. Even if there is a bone, I make sure I eat that bone. I take every piece of profit I can get, because I know when I start losing, it is not usually very nice on my end. Okay? Even if I have 6 years experience, when I am losing consistently for maybe 3, 4, 5 days, I am not very happy. By the way, no one is happy when they are losing. If we are honest. However much you have accepted that you are collecting samples, there's always that uncomfortability when you are losing. Okay? And the best way is to, when you have a good win, maximize it. Maximize it. So right now, GBP USD now is the time it wants to cross that level. Now imagine this is 9:45. We came here at around 9. So 2 hours and 10 minutes have passed. Price has not yet broken this level. It is still hovering. It is still playing games. But as I said, you don't play those games. Don't play those funny games with the market. Your work is to get good confirmations and get the best risk to rewards for yourself. You have to be very, very selfish for yourself. Huh? I'm telling you. Because when this market decides to take from you, you can move from zero, no, you can move from 100 to zero in less than 2 minutes, and you will not even know what has happened. You can move from 100 to zero, and yet from zero to 100. Okay, let me give you a live example. From $100, when you deposit $100 with my link on the bio, and then we grow that account within 6 months to $1,000, it is very, very, very easy. It is just a matter of one day. You move from 1,000 to negative, not even zero. You will now go to negative. So you will have wasted efforts of 6 months. That is the nature of losses, my friends. That is the nature of losses. They can wipe you out anytime. Anytime. Especially if you are not experienced in the sector of risk management and proper market analysis. So right now, there is someone who has already gotten in a sell. Then when market began buying, they got out. Now they're in a sell again. Now they are waiting now for the market to do what? To break this level. It's not bad, but that is not our style. Our style is that we don't play the psychological games. We wait for the market to give us profits, not to give us a right confirmation, then we get in. And the good thing is that the confirmation always comes. Always. There is an information, for example, right now, we are only waiting for 2 pieces of information right now. Based on our sell bias, which we derive from the higher time frame, we are waiting for the Asian low. This is the Asian low. Asian low. So we are waiting for the Asian low to get taken out, or the Asian high to get taken out. Now when the Asian high is taken out, we don't engage for that day. Yes, we will not engage. But when the Asian low is taken out, we must engage without thinking. Without thinking. Don't even think. As soon as the Asian low is taken out, wait for a small retest. Inside. You get inside very fast. But before then, you have to stay cash. Stay cash, stay humble, and then you stay hungry. Stocking the market the way you are doing right now. So once again, I will have to, okay, let us wait and see. Today I wanted to wait for the markets to react so that we can take that trade together, but we are still on the games, man. We are still on the games, brothers. Ladies and gentlemen, we are still on the games. We are still on the games, brothers and sisters, on the live stream. And guess who is not going to get caught up in those games? Us. Not me. Us. I have saved you 2 hours of mental torture. So the only thing we can do now is wait for the market to sweep the Asian low. When it sweeps the Asian low, you look for an entry and then you will sell. Before then, stay cash. So I wish and I want to end the live stream there. And don't forget, if you are serious about joining my live sessions, you should not be in my live sessions if you're not trading with me. Remember, I will not tell you to gamble your money knowingly. The way you are analyzing right now is the way we shall analyze 5 years from now. And if I don't get those 3 bets for 5 years, then how do you think I'm going to feel? I will not be a very happy man. So do what you have to do. Take your money from where you are taking it, put it there, then we can continue with this journey. Alright, so let's meet in the next live lesson. Possibly tomorrow I'll give you a notice. No, tomorrow is Friday. Tomorrow we are here. On Saturday I'm going to give you a notice, then we are going to continue with the live stream. So thank you once again for joining my live streams. It's not hard, it's not easy to stay focused for almost 2.5 hours. So thank you so much. Let us meet tomorrow.